Hey, what's going on, guys? It's Joe from Gen Z Investments, and today I'm going to be talking about Alibaba stock. Alibaba's down 41% in the last year, which is a significant drop in a share price. It's had highs around 319, 320, and it's come back down to around 150-ish. So a huge drop off in price, and most of this was due to its fine, which was equivalent to 2.5% of its revenue and 12.1% of its net income in fiscal year 2021. On its own, it won't really impact Alibaba significantly in the long term, but in the short term, it definitely has a strong effect on net income, coming in at 12%. Just one more thing that why the price is going down. Ant Group, which Alibaba owns a 33% stake in, their IPO was suspended due to Jack Ma coming out and saying that the financial system is broken in China, and then China regulating the company and preventing them from IPOing. But before we talk about Alibaba specifically, let's talk about the three industries that it's dominant in. First is e-commerce, which is a $9 trillion market. It still has slight room to grow, but it's going to be a steady revenue stream. Companies like Amazon and Alibaba, which already have massive e-commerce presences, aren't necessarily going to see massive revenue growth from those segments, but they are going to see steady revenue from those segments. And both of these companies bring in billions and billions of dollars. So having such a big revenue stream like that's going to be consistent is great. But the next two trends are growing way more. Cloud computing. It has pretty much digitized enterprises. Enterprises all work on the cloud, whether it's Gmail, using Microsoft Outlook, Excel, creating software on the cloud, having data stored in the cloud, right? This industry has grown massively and has become one of the most important industries in the world, and it's expected to have an 18% compounded annual growth rate going into 2028, which will make it close to $1 trillion market. Alibaba has the fourth biggest cloud computing business in the world and the number one biggest cloud computing business in China. This is going to be their highest growing segment. They are going to profit off this massive cloud computing trend. Next is financial technology, which is another industry like cloud computing and e-commerce, which have been accelerated by COVID. This industry is seeing a 21% compounded annual growth rate going into 2026. So these are two massive industries, and Alibaba is a massive company with great financials that is poised positionally, is very well poised to uniquely position off of these trends. Alibaba is the biggest e-commerce and cloud computing business in China by a long shot. They assert complete dominance within China. It owns the country's largest online marketplaces, Taobao and Tmall, and it has the largest cloud computing infrastructure platform service in China by far in Alibaba Cloud. And their cloud revenue last year was $2.4 billion, which is a 30% year-over-year increase. And the e-commerce market share in China, they have 69% of it, which is a $1.2 trillion marketplace in terms of volume. So these two industries, they are absolutely taking advantage of and bringing in loads of cash. Another thing is Alipay, which is under Ant Group, and this is a behemoth, right? They're processing hundreds of trillions of dollars in volume through Alipay a day or a year, and that number is only going to increase as financial technologies become more adopted and the technology itself improves. And Alibaba has so much money to put into research and development, to put towards their 33% stake in order to improve the business and market the business. So these three digital empires are going to continue to expand and dominate China and eventually make more of a footprint globally. So a company that is going down from bad news due to the fact that they're in China and have stronger regulations it's understandable, but it's also giving us a valuation that over the long term is at a bargain, which I will get into. But first, let me get into the financials. Again, I'm keeping this video super quick and super short. Those videos seem to get the most views, so I want as many people seeing this because Alibaba is a great stock. Not financial advice, just trying to lay out the facts here. But let me go into financials. So you can argue that Alibaba is the most financially stable company in the world. It's at least one of them. It's right up there with the American big tech. It's right up there with the other big tech from China and Baidu and Tencent. So, I mean, this balance sheet is wonderful. So recently they announced that they're doing a share buyback, share repurchase program for 10 to 15 billion, which shows investors that they are confident that their shares are undervalued and that they are willing to pick up more shares. This is going to increase the price floor, increase the price, and increase investor sentiment. Next is revenue, which came in 33% year-over-year growth at 31 billion, which is massive. I mean, this company brings in so much fucking cash, it's absurd. They're expected to end the year at 143 billion in revenue, which is a 30% increase. I mean, guys, this company brings in almost more money than any other company in the world. So we're talking about a financial behemoth that is going down in share price due to Chinese regulatory fears, due to Ant Group not IPOing fears. Over the next 20 years, this company is only going to continue to dominate. It's just in such a great position. So this is a great long-term core stock bet. I mean, yeah, the stock is going to be volatile due to China. It's going to go on runs of 3 years of great gains, and then half of that, if not more, is going to come down from some regulatory scrutiny or for something. So you have to be willing to hold, but you have to understand how great of a company it is. One last thing, it converted 3.2 billion of its Q1 revenue into free cash flow, which means that they now have 72 billion in cash equivalents and short-term investments on its balance sheet. So this gives them so much leverage and flexibility to market, to start up new businesses, to acquire businesses, to work on new segments. I mean, if you have this much money, the amount of leverage you have it's really underestimated, and I feel like investors also underestimate that. So, great financial company, dominant in 3 huge trends that all were accelerated by COVID-19, and is trading at a discount, which I will get to now. So their valuation is dirt cheap, right? Using a discounted free cash flow method, which we pretty much calculated so we took the starting point, we add all the company's non-operating assets, cash, equivalents, investments, and then we subtract it from non-equity ownership, interests, and claims. So debt, minority interest. So this is how we get the intrinsic value. And dividing the estimated equity value by 2.7 billion shares outstanding, 2.7 trillion shares outstanding, we get a $400 intrinsic value, which is absurd. So, and this discounted free cash flow value is calculated by discounting the company's free cash flow at a discount rate of 6. So I think that's a fair assumption. But a $400 intrinsic value pretty much implies 150% undervalue with the current share price. The price to sales is dirt cheap. It's 4 using 2021 expected revenue. They're expected to earn $9.7 a share in 2021, resulting in legitimate profitability and a PE ratio of only 20, roughly 1/3 of Amazon's current PE. If we use their 2021 estimated earnings, 52-week high is 319. They've been in the 150s, 160s. So using intrinsic value, PE ratio, trailing 12 months, EPS growth, high and low of where they've been, the complete dominance that they have in the market, combined with the share price going down due to regulatory concerns, I think if you're willing to deal with the regulatory concerns and FUD, holding this stock for 20 to 50 years is a complete steal. You're going to see massive growth here with little risk within the company itself. I'm keeping this video super short. Hope you guys have a good one. Don't want to be too loud. I'm at college. Don't want to wake people up. So, hey, try to keep this quick. Alibaba is a great stock. Do your own research, not financial advice. See ya.